You know, in the world of trading, so many people think that more is better. More strategies, more indicators, more chaos on their charts. But what if the real key to consistency wasn't about knowing everything, but about mastering just one thing perfectly? Well, today, we're going to break down a single, incredibly powerful, and repeatable trading setup that might just change the way you see the markets for good.
And this is the promise: one setup for life. Think about it. By focusing all of your energy on recognizing and executing a single high-probability pattern, you filter out all the noise. You achieve a level of consistency that's just impossible when you're jumping from one strategy to the next. This isn't about finding a trade every single minute. It's about finding the trade.
So to really understand this setup, you first have to understand what makes the market move at all. The entire financial world, it runs on one thing and one thing only: a relentless, constant hunt for liquidity. This is the engine that drives everything.
And that liquidity, it really comes in two main flavors. You've got external range liquidity, or ERL. Just think of those as big pools of stop-loss orders sitting right above major highs and right below major lows. And then you have internal range liquidity, or IRL. These are inefficiencies, little gaps and imbalances left behind when the price moves too fast.
Now this is where it all starts to click. Look at how this simplifies everything. Price is in a constant dance between these two states. It moves from an old high or low to go fill a gap. And once that gap is filled, its next target is another old high or low. That's it. It's a binary process. And once you see this rhythm, you can't unsee it.
The specific setup we're focusing on today is a reversal pattern, so it's absolutely critical to know the difference. A continuation, well, it just keeps the party going in the same direction. But a reversal is a signal that the power is shifting, and the trend is about to make a U-turn.
And this just illustrates the difference perfectly. Look at the left side. For a continuation, you see that new candle closing decisively above the high or below the low. That shows pure conviction. But now look to the right. A reversal shows hesitation. Price pushes to a new high, but then it fails and closes below it. That failure, that's our first clue that a change is in the air.
Okay, so now we know what drives the market, but that's only half the battle, right? We need to talk about the second critical piece: timing. Because in trading, when you look for a setup is every bit as important as what you're looking for. This is where we bring in the clock.
This note says it all. The market might be open all day, but high-probability opportunities are not. They show up in very specific, recurring windows of time called macros. The real discipline here is having the patience to wait for these windows and just ignore everything else. And here is your schedule. These are the specific 20-minute windows during the New York session where this setup has the absolute highest probability of forming. This isn't a suggestion. For this model, it's a hard rule. You're a sniper, and you are waiting patiently for these exact moments to strike.
So we have the theory, the why. We have the timing, the when. Now it's time for the blueprint itself. We're moving from the abstract concepts to a concrete, actionable checklist for your entry.
These 5 conditions, they all must be met. It all starts by confirming you're in that macro time window we just talked about. From there, we look for a very specific sequence of events: a stop hunt, a market structure shift, and then our final entry confirmation. Let's break down those key steps right now.
This setup begins with a little bit of deception. You can see it labeled right here as manipulation. Price makes a sharp move down, taking out all the stop losses sitting just below a recent low. This is designed to trap traders on the wrong side of the market right before the true move begins. This is that hunt for external liquidity we talked about earlier.
Okay, so after the stop hunt, we need confirmation that the manipulation is over. And that confirmation is the market structure shift, or MSS. As you can see here, it's a clear, powerful break of the previous price pattern. This tells us the reversal is real and that the buyers are now firmly in control.
So the shift has happened, but where exactly do you get in? Well, that market structure shift leaves behind 2 key price levels for us to watch: the inversion and the breaker. These are our precise points of action, created by the market's own movement.
Our primary entry, our number one target, is the inversion level, highlighted right here. After that strong move up, price will often pull back to test this specific area. That is our signal. The risk is clearly defined, the entry is precise. This is the moment we have been waiting for.
All right, we have all the pieces: the engine, the clock, and the blueprint. Now, let's put it all together into a seamless execution plan.
And this slide just puts it all together beautifully. You can see the entire sequence play out right inside that defined macro time window.
First, you get the dip down for the stop hunt. Then, the aggressive move up that creates the market structure shift, and finally, the patient wait for price to come back to that inversion level for the entry. This is the pattern.
So what's the result of all this patience and precision? Well, the source material shows this structure consistently offers a profit potential between 50 and 200 ticks. That is a substantial reward for a perfectly executed plan.
But listen, a great setup is nothing without solid rules. Always aim for at least a 1-to-2 risk-to-reward ratio. Your stop loss goes right below the inversion level, no questions asked. Limit yourself to just 1 or 2 of these high-quality setups per day. And above all, do not rush. Let this setup come to you. Patience pays.
And what if you miss that perfect inversion entry? It happens to everyone. But there is absolutely no need for FOMO. This quote is your reminder that the market often gives you a second chance at the breaker level. So if you miss that first opportunity, stay calm and watch for the next one.
So there you have it. The engine, the timing, and the execution. A complete blueprint for one single, consistent, high-probability setup. Now the only question left is, where will you find the next one?